In this video, we are going to be analysing Alibaba, ticker BABA. If you want your own stock analysed, throw that in the comments. We'll get round to it when we can. Now, to get straight into the video, we can see we're down about 5% on the day. Now, they did have earnings yesterday, which was actually quite weird, is they didn't actually sell off too massively until the market opened. You can see market opened basically where we closed yesterday, and then we hit down about 5%. In a few minutes, we pulled back about half of that loss, and now you can see we're pushing down to those lower lows once again. So what are the key levels that I'd be paying attention to on Alibaba going forward? So what we can see is most likely we will continue to push to the downside. What are those key supports I'd be paying attention to? So at $83.60, this is our first deviation over on the 6-month chart. So again, just to know, this chart here is a 6-month, this one here is a 1 year. So what we want to see, and isn't the case on this chart, is these to be moving the same. You can see on the 6-month we are trending up, on the 1 year we are trending down. So this does always make it a bit harder to trade because again, the short-term trend isn't the same as the 1 year trend. So it usually means if I'm trading this, I personally just use reduced size. But what we can see anyway on the 6-month, if you're trying to catch the kind of more recent trend, which is a bit more bullish, we can see we do have a high probability bounce area at $83.60. So if we hit that potential bounce, now if we did break lower, we do have $75.60. And if we break that, we have $70.50. And just to kind of note, the final two levels I'd be paying attention to would be $57.50 and $62. Now, the way you can kind of pay attention to these levels, and if you already know what standard deviation is, this will make a lot more sense to you, but these golden lines, this is the first deviation. So 68% of the data should trade within these gold lines. Then what you have with these blue ones is 95%. So this means, again, 95% of data should trade within these blue lines. And going on to the green ones, these are usually the best ones because 99.7% of the data should trade within these blue ones. And again, the longer time you go out, kind of the stronger these levels are going to be. So we like the 6-month chart just because, again, that is kind of the newer trend. But we always want to be paying attention to the 1 year as well, because again, that is always going to be that bit stronger of a level. But what this really does mean is may ignore this 83.6. And the reason for that is, again, the two charts are kind of different. We have the 6-month uptrend, the 1 year downtrend. So this level may not be as strong as if, you know, both of these were pointing up. So that's why I'm not as keen on that 83.60. Maybe a potential day trade, but probably not something I would swing. However, if we can start pushing to the downside, we do have the 75.50. Now, this is the first deviation on the 6-month. So again, a lot higher probability that we do start to bounce from around this zone. But really the key one where I would be paying more attention to is going to be this $70 or $70.50. Because again, this is the second deviation. So 95% of the data should trade within here. So again, a high probability that we bounce coming into this range, considering we had a small amount of data trade over there. Probably about, 2%, maybe 3% of the data. So we may get a temporary breakthrough here, but most likely we'll break back through that quite quickly. And as well, it is below the overbought area, or kind of like below the support on the 1 year. So again, kind of just adding to that confidence that we should start bouncing on that level. Because again, that's a problem with this 83, is that that's the only reason for a bounce. It's not like we're oversold on the 1 year. We'll still be near that statistical mean. So to me, it doesn't make sense to really be paying too much attention to that. Again, 75 to around the 70 being that key level. And if we did break lower, obviously we do have the 62 and 57 to be paying attention to. Now, if we did start going a bit more to the upside, so we do have $96.50 to $89. This is our statistical mean. Again, if you understand standard deviation, this is just considered basically, if you're looking at a stock, this is basically considered fair value, the average sort of price. So in this range is not usually an area where I want to be holding a stock or buying it, unless maybe we're looking at an investment account. But from a trading perspective, this is fair value. So to me, there isn't much opportunity here because it's a gamble which kind of direction we go on here. Usually waiting for that catalyst. And again, you never know what that catalyst is going to be or the results of that catalyst until it comes out. So really trading this range, I think, is a lot more of a gamble. I tend to wait for it to break. And again, that's why I talk more about the supports, because if we start breaking down from here, we have a higher probability that we start to go up than we do continuing down. And that's why I pay attention to that. If we do break, though, this fair value range, then I'm paying attention to, as a resistance, 102 to 109 or 110. And if we did break that, we do have final levels to be paying attention to around 116 and 123. So these are the main levels I'm paying attention to on Alibaba. Again, like I said, my main focus, considering earnings were relatively bad, we are continuing to the downside. I'd kind of wait for that break below the 83, come back to test it as a resistance if that holds, then continue lower, and then really where I'm looking at more buy levels would be this 75 and the $70.50. I hope you enjoyed the breakdown on Alibaba. If you did, why not drop a like and subscribe? If you want your own stock analyzed, throw that in the comments. We'll get around to it when we can. And if you enjoyed the video, why not check out this analysis video.